Guys, good morning, October 3rd, 2019, Thursday, and it is time to focus and trade this market. Now, you got to be extremely patient because intraday bounces are to be expected, but overall, the strategy of staying with your positions all the way until tomorrow and making sure you open in some puts for Monday drop as well will pay off in the next 72 hours, guys. So, key numbers for the day are 28.91, 28.51, 28.11. Institutions are likely to sell today ahead of the job report tomorrow. Okay. However, we're not discounting the probability of the fact that the market could just stall out just a little bit here. The key component we're going to be looking at is the 28.82. We need to make sure that we break that number solidly by 10:30 a.m. If that number is not broken by 10:30 on strong volume lower, which I think at the point we're recording this video, I mean, the futures are still in the green. They're at about 28.90 area. So who knows? Maybe by the time the market opens, they will actually open lower. So if we don't get a sharp break below 28.82, then expect some sideways kind of trend going on. Basically, that tells us that there's still some bulls that are hopeful of the fact that the market may not drop tomorrow. And use that opportunity, use these levels to actually buy puts on any bounces, guys. So the great catalyst is finally here tomorrow morning at 8:30. We're going to find out the actual reaction. Ultimately, we want an initial pop followed by a drop. Now, the initial pop at 8:30 typically does not last, so it's not like the pop that you guys should be scared of. In other words, we're not expecting the market to open higher. We're expecting the pop to happen maybe between 8:30 and 8:45 and ultimately drop by the time the market's open at 9:30. So for the purpose of trading options, you really you don't want to do anything. You want to stay with your put positions. You don't want to change anything, guys. Some new trades that we're looking at today is ANET, which is sort of another cloud play. Tesla, STZ, some charts we're going to take a look at. Costco will be announcing earnings tonight. So this is not probably ideal stock for trading options, but there could be an opportunity there. We're going to review that trade first thing tomorrow morning. And some other trades right here. So we're going to take a look at some new ones in detail. Now, the question of the day, will oil find support here or will it continue to break lower today? Oil charts is deteriorating at the speed of light. Some of the charts we went over with recently, I mean, just this solid def cross, strong move 11 formation, strong def cross on the MACD as well. It looks like, we're getting close to this 51 level. 51 level on the daily chart is important because every time we get to the 51 level, we kind of stall out, and that's where we bounce from higher. So this level of 51, if that is broken, however, today or tomorrow, the job report could be the catalyst for actually oil to drop. So if oil drops below 51, this could cause a huge move lower, like a 1,000-point drop in the Dow. If the oil breaks below 51, it's going to be substantial and significant catalyst for the market to move lower into Monday session as well. The weekly chart on oil is highly bearish as well. If you take a look at the weekly, if we break below the 51 level, the next stop is going to be right around 42. Now, the 42 level was established at the lows of the crash last year in November, December. So as you can see, this low of 42 in oil was coincided with Amazon hitting 1,340 bucks at the lows on December 24th, right before the Christmas day. And then after Christmas, things started rebounding. See, after Christmas, oil started rebounded, and so did the rest of the market. Now, this time, we think we're going to actually break below 42 level, not necessarily this weekend, right? But we're heading in this downward spiral. We have any resemblance of parallel of this type of drop right here. I mean, we can easily drop below 40. And that's why in yesterday's video posted on YouTube, guys, I'm not discounting the fact we can actually drop all the way to 2350, because that's where S&P 500 traded when oil traded to 42. S&P 500 in December went all the way down to 2,350 bucks roughly. So just different type of circumstance, different type of conditions. The setup is highly bearish. However, we're getting close to, you see this bullish reversal candles right here. So maybe oil will have its last day lower and it could reverse. So definitely pay attention to how oil futures are trading today and tomorrow to determine exactly how intensely bearish do we need to get here. Do we need to go overboard? Or do we need to, on the opposite, collect some gains if oil actually shows some signs of exhaustion here on the drop side? Now, it doesn't mean that it's not going to drop. Ultimately, it will drop, but it could just stop. It could just pause here. So very important day today and tomorrow for oil, and that is why we call it the question of the day. Yesterday, we pointed out that we had in the lower part of the trading tunnel. We're really thinking that we're going to stall out this 2905 number, but we did reach this level of 2891. This is exactly where pre-market all the action is at in the futures of S&P 500. 2891 seems to be the number. We're dancing around it. 2889, 2893, which clearly this is an old snapshot that I've been using for some time as an illustration of the levels, but is actually matches with this level of 2891, which was established a while back. So you may be wondering, okay, where things are going to be going. So we're going to answer this question shortly. But the main concern for today is we could actually be trading in the narrow tunnel range between 2874 and 2893 all day without actually hitting some major targets on the way lower, which our next target is 2851. So expect maybe some hopeful bulls trying to maintain the level of the market here. There's a couple of silly strategists. Well, they're always, I mean, these guys, they just don't look at the charts. They don't know what the hell is going on. Basically, these strategists are going to come in and say, oh, buy the dip. Oh, this is a great time. I mean, Jim Cramer is going to say, oh, well, start buying here. So all these goofy guys, they're going to be saying buy the dip, basically, is what they're going to say. But, you know, the same guys were saying, you know, when the markets were crashing last October, November, December, they were saying the same stuff. Oh, there's going to be a Santa Claus rally. There's going to be this. There's going to be that. They were all wrong, but they just can't help it. They just, you know, they're bulls, you know. You know, we're not trying to help them. We're just trying to make sure, guys, that we stay on the right side of the market. So the question is, where is S&P 500 going next? And the answer is this level of 2851, this kind of intermediate level. If we break that, we can easily end up at 2810. 2810. This number, and actually this slide, was taken from the video, from the daily 13 market moves daily analysis video on September 4th. So if you review this slide, you will see that there. And so we're calling this level 2811. So the next two stops, 2851 and 2811. So if we're getting close to 2851, you know, it's reasonable to take some profits off the table and keep the rest of the positions until we hit this 2811 level. When I say 2851, so if you see the market drop to 2851, expect a bounce. So basically what you do is you sell, let's say, 1/3 of your position. When it bounces back, let's say to 2866, you basically re-enter the put side, and then you ride it all the way down to 2811. That's a very easy strategy, guys. Now, recent history points to the fact that we could still have 3 more days lower. If you take a look at this, and surprisingly, all coincides right around the dates of the job report that was announced on August the 2nd. So from August the 2nd, if you look at this chart right here, guys, so very similar pattern took place on August 4th and August 5th. So we had the market was hitting all-time highs around 3,000 level. We have move lower 1, it bounces, move lower 2, move lower 3, move lower 4. So you got 4 basically down days in a row, which all took place. Some of these bigger moves lower took place after the job report. So the job report was on the 2nd, which was the Friday, and then you had some huge drops in the market on pointed by these dots. So you see August 2nd was the Friday, and then August 4th and 5th were the biggest drops in the market. Coincidentally, tomorrow is October 4th. Now, that is probably not coincidentally, and I think tomorrow the market could be hitting some substantial lows. It really does match exactly to the T 60-day mark from where we're setting this low. This dot right here, by the way, guys, is 2775. Now, in a couple of videos ago, we mentioned the level that S&P was going to head all the way down to 2750, and we still believe that that could materialize. So if S&P hits 2750, that is likely to take place tomorrow or Monday. That is why we're suggesting making sure not only do you collect some gains tomorrow, but you would reposition yourself to make sure that you take advantage over the big Monday drop. We think the big Monday drop is coming after a drop tomorrow. So yesterday the market was playing with these levels, and I just want to point this out, right? So it drops, then it goes sideways. It drops, then it goes sideways. Right now we're in a situation where this trend is likely to continue. So drop, sideways, drop, sideways, drop, sideways. So far I'm recording this. The futures are at 2891.5 pre-market. So this sideways move is likely to resolve lower throughout the day. The level to clearly keep your eye on is 2874. But we can easily slice through that and again finish the day at 2851. Then that number of 2750 becomes very reasonable to accomplish by Monday. So very simple strategy, guys. Do not buy calls, just stay firm on the strategy. Very simple trade to consider today because the chart actually matches the catalyst. We got Tesla a little shy on the numbers, on their delivered numbers. So the stock is down pre-market, not as much, but we still think there's quite a bit of room. So the number was revealed yesterday. Initially, the stock dropped to this 229 level, revisited at 228 pre-market. At the point I'm recording this, it's at 231. The idea is when Tesla bounces, if it's going to bounce, or right at the open, start buying some puts, 235 puts, 230, 225, and even 222.5 puts. The level would be targeted in Tesla is a level of $212. We're targeting roughly about a $19-20 move lower here. This is why we want to take the trade right now. If you take a look at the weekly chart, we are in official death cross formation right here, guys, and it's a beautiful setup because when you have this moves higher in the stock under both blue line and orange line, they typically resolve in a move lower. So that would be the reason why you want to get into this trade as early as the market opens and ideally add some more if the stock does manage to bounce like at least a few bucks. That would be an ideal entry. When you take a look at the daily chart, you've got a very nice gap down that was formed right here. And the stock has struggled to actually conquer and gain ground above that gap down. So any level at like 243 to 250, that's an area where the stock keeps failing, and we think it's going to revisit ultimately this level of 201.87.5. But for the purpose of trading this in the next 48 hours, we think a level of 212 is very reasonable. Just a quick note. Tesla is not the type of stock when the markets are dropping, it typically does not drop as much as Amazon, a big KNG, or some of the other stock. It does not have as strong of a correlation with the rest of the market. It's got a mind of its own. So that for that reason, that would not be our ideal trade. But given the strength of the catalyst and the strength of the chart, this trade does make sense. We're just not expecting it to hit a level of like 200 by tomorrow Monday. So 212, take profits there. Considering ANET, Arista networks, 230, 225, 220 puts, the stock catches a downgrade so far. Pre-market is not reacting, trading at 228.33. We like the setup considering the chart is ugly as hell. We've got a death cross formation. We've got a ton of bearish reversal candles happening right about as the stock tries to regain some ground above the blue line. We got a death cross right here on the MACD, guys. This is a beautiful chart. This thing, it will move lower. The magnitude of the move is questionable. However, we've seen the stock is capable moving 10, 20 bucks on certain days. We think there's an easy $8 move lower today, tomorrow. So from 228 maybe to a level of 220 possibly. Getting under the 220 mark. Ultimately, in the next 30 days, this thing is ready to break down all the way to the 181 area. Considering STZ 205, 200, 195 puts, stock did announce earnings this morning, so that would be the catalyst. Initial pop and slight drop at the point we're recording this. Stock trades at 206. Does this chart look bullish? Guys, because it's actually kind of sort of a bullish chart here on the daily. time frame on STZ, but only in a sense that it doesn't have this similarity of a def cross or a def hook that other stocks are showing consistently. We actually have a bullish crossover right here. It seems to be dying out, and if you take an equation, these multi-top formation right here, it makes sense. The stock could revisit the level of 190 to 192.5. We do have a crossover forming right here on the MACD. So as bullish as the daily chart looks, it's not the case on the weekly. The weekly chart points to a definite def hook right here. So multiple bearish candles are right here, back to back to back to back. Guys, this is how a top looks. So expect a move lower, target this area of 190, collect profits there. Yesterday, on October 2nd, as expected, we did get a move 3, where initially we got a pretty significant gap down in the morning, and then the stock just just even failed to move higher right at the open. It had an opportunity. Typically, you have like a move higher and then followed by a drop. It didn't even try. It just started dropping, bounce, drop, bounce, drop, bounce, drop. Continued that throughout the day. 2-day sequence is 2-3, very bearish. Considering the size of the gap down, I mean, this market did not even have a chance yesterday. Made it for pretty easy trading conditions. 5-day sequence is 12, 2, 6, 2, 3. 2, 6, 2, 3, guys. This is a highly bearish sequence. Pointed in the video yesterday, we can easily get a 3-3-3 move here. Doesn't happen often, but this market is about to go substantially lower. This is how this 5-day sequence looks, and if you really try to take an overall broader look, what this 5-day sequence actually points to a bigger move too. So things are unwinding, institutional investors starting to take their money at increasing speeds, and that typically will resolve in a sharper move lower over the course of the next 72 hours. The move for today, we're expecting a 3. If the bulls try to maintain this market, we could possibly end with an 11. So slight pop to a level of maybe 28.94 to possibly 29.05 area. That level is to be shorted. VIX is officially hitting above 20 yesterday and closing above a critical level. Yes, VIX is numerical high and it is uptrend, which makes for perfect conditions to be buying puts, even out of the money puts. VIX pre-market holding that 19.9 level, 20 level pretty firmly. So we think there's going to be a substantial move higher in the VIX in the next 72 hours. The importance of the VIX closing above this 19 is pointed out in the video yesterday. This bearish reversal candle where VIX has actually failed, that area has been cleared. So now we're above 19, we're above 19.5, we're above 20. And so from here, we can easily revisit this level. So target the VIX level of about 25, possibly by Tuesday. By Monday, Tuesday, it could definitely take place. So start buying puts at the open, guys. Key takeaways is short any intraday bounce to possible 28.94 to 29.05 area. Be patient. Do not day trade. Just stay firm with your positions. Stay with your puts and make sure you buy some Monday puts as well. Watch for a sharp sell-off, potentially brewing around 2:15 p.m. today. With an opportunity to hit a low of the day of 28.51. Position for big drop in the next 10 days, guys. Let's roll. Easy trading conditions, guys. We're not expecting any crazy bounces. Let's roll and make some money. It's time to do this. Let's go. Oh, yeah, and make sure you don't forget to short the damn bounce.